Thank you very much for joining us tonight, taking an hour out of your, an hour or so out of your busy life and your evening. This is a webcast, which is the first one for the year, actually. I'm pretty sure, yeah, the first one for the year as we head into 2021. We get to leave 2020 behind us, thank God, or whoever you pray to. And hopefully we all have a fantastic year going forward and a great profitable year in trading as well. This webcast is brought to you by Trader Circle. You might be wondering who we are. The other side of the business is Emerald Financial. Trader Circle is a business that's focused mainly on trading, right? We're traders ourselves, and we just want to be able to educate and support other traders as well. Emerald Financial is more portfolio focused. We've got a gold portfolio in the play there. We've got ETF portfolios. We provide a stock scanner for fundamentals and filters. It's a lot more focused around longer term investing. And if you're into that kind of space, I urge you to check out that side of the business as well. Tonight, we're going to be focusing on key macro elements impacting the markets right now. So that's just a fancy way of saying I'm just going to give you a bit of a market update. We're going to talk about how we traded the holiday period. This is a webcast that we will run again towards the end of the year to kind of set you up for the holiday period. Tim's going to jump on and talk about some future events that we think you should keep an eye on through 2021, and give you some trade ideas as well. Because let's be honest, everyone likes trade ideas. Now, during the session, at any point, if you've got any questions, there should be a question and answer box somewhere on your screen, or a comments box or something, right? I'm usually the presenter in these things. I'm not the attendee, so hopefully you can see a little box there that you can type your questions into, or your remarks. We actually like to hear people's opinions. It's, there's no right answers when it comes to the market, as you guys are very, very well aware. So if you've got any opinions, we'd like to hear them as well. We'll probably answer a lot of these questions at the end, but if we see them as we're going along, and we'll try to answer them on the fly. Trader Circle was established in 2005. As I mentioned earlier, the sole purpose was to support traders, and nothing's really changed. We became one of the busier options trading desks in Australia. If you don't know what options are, I'm going to go through that a little bit tonight. Even if you're a beginner, it's a good concept to understand, but I wouldn't suggest learning to trade options as a beginner, right? We do teach people how to trade options, but we prefer to only teach more advanced people how to trade options. We do have beginners courses, which I will run through at the end. Hopefully you do get a bit of a basic understanding as to how options kind of work in tonight's presentation as well. Our method is to simply teach you step by step how to trade the Australian market. We'll provide you with support, tools, trading ideas, and we'll hold your hand as you transition to trading the live market if you're a beginner. My name's Caro Cornips. That's the goofy looking picture on the right there. It is like 5-6 years old. I look much more older and sophisticated than when that photo was taken. I just haven't updated it. And the other presenter tonight is Tim Michaelides. He's the head trader. Tim's like my boss. Tim used to do my job, which is to be the head trainer. So I look after these clients coming through the workshops. I work with you kind of one-on-one and help mentor you as you learn these things, right? Answer all your questions, kind of really be there to help you and point you in the right direction and correct those silly mistakes that you're prone to making as a beginner. And then hold your hand as you really start trading with your own money. That's my kind of job, and that's what Tim used to do. Carlo Castellano, who was one of the co-founders of the business, retired 4 years ago or something. And Tim became the head of the trading desk. So Tim started, I think, about 8-9 years ago, around the same time I did. Or maybe it's 10 years now. And he started off as basically a client. He came along and learned to trade. He was running a couple of businesses at that point, I'm pretty sure. And then he basically focused on his trading, got good at that, and I think Trader Circle offered him a job to be a trainer so that he could help train new clients coming into the business. From there, he basically worked himself up, and became the head of the trading desk. So between the two of us, I'd say there's a fair amount of knowledge. If you've got any questions about any particular stocks that you're looking at, if there's time at the end, we're happy to give you our opinion on that as well. And anything to do with anything that we touch on tonight as well. So plenty of knowledge to spread around. Hopefully you guys enjoy the session. I just do want to say though, before we get into the guts of it, it's general advice only, right? So any information contained in this presentation is general advice. It's not tailored to your personal circumstances. What that means is you need to decide for yourself as to whether it's appropriate to you. Is that fair enough? All right. Now, I said what I'd do is I'd just kick us off with a bit of a market view. And I was having, before the session started, my charting, my computer was playing up a little bit, I'm sorry to say. Just as it was working all fine, been using it for the last half hour, and then just as I was about to start the presentation, my internet disconnected, funnily enough. Thank you, NBN. So I was in the middle of opening everything up when I realized I had to start the presentation. So hopefully we're all good here. I'm just doing all this off screen. So I'll bring it across here. So hopefully everyone can see my chart. I've got Pro Medicus up, which had obviously a stellar day there, the contract they won, but it's not really the point right now. What we're going to talk about is the XJO. Now, the XJO is the ASX 200. It's actually I think the proper name for it. Whenever we talk about the ASX 200, we only really use the term XJO, right? So if someone says to you, the market went up today, or the market's looking pretty good at the moment, or have you seen the market? When they say the market, they're talking about the XJO if they're talking about Australia. In America, there's a whole bunch of markets. There's the Dow, there's the S&P 500, there's the NASDAQ, to name the popular ones. In Japan, it's the Nikkei. Hong Kong, every nation has their own kind of index, right? Ours is the XJO, or the ASX 200. That's the main one. That's the market, right? And it comprises the top 200 stocks by market capitalization. So the top 200 largest companies that are listed, right? This is an index, a weighted index of that, right? So it represents the market. CBA's in here, ANZ's in here, Westpac's in here, RIO, BHP, CSL, all your kind of household names that you would recognize are in this top 200 in this index. So when we as advisors and traders want to know what the market's doing, we like to look at charts of this. And as shorter term traders, we prefer to look at more technical analysis rather than, say, longer term fundamental analysis. And that being said, we still look at fundamentals, and we will talk about that tonight. Tim especially going to be looking at more the broader macro, longer term, what's going on this year. But from a shorter term trading perspective, if we're looking from a 1 day to 1 week to 1 month kind of scenario, then this is the chart that we look at to apply our technical analysis to gauge what we think the future is going to do in the short term, basically. Now, if you're a longer term investor, I urge you to also go look at technical analysis, because it can really kind of help you time your entries. So what a lot of our clients have told us. A lot of people come to us with share trading backgrounds, and they realize shares aren't a good tool to use for short term trading, and but they are good for long term investing, obviously. And they've told us that the type of technical analysis that we teach them is actually being really helpful and profitable for their share trading, because it helps them time their entry, or their share investing, I should say. So you can see, I meant to delete this before I started, but it was a bit of, I guess, a sneak preview. You can see that the market's broadly speaking, trading in an uptrend, right? It started down here in March last year after having a big sell-off, and now it's trading all the way up here. And it doesn't take a genius to say the market's trading in an uptrend, albeit a very shallow one. When we draw our trend lines, we draw something like this. I'm going to thicken that line up just so everyone can see it. Maybe we'll fall to the trend. Maybe we'll go sideways into the trend. At the end of the day, we're not too far off the trend, right? So far, the trend comes in around 6,400. and our market's trading at 6,700. That's about a 300 or 500. I would say, what's that? About 5% fall. Okay, so not even a correction. I think what's more likely to happen though is that we either continue to push higher, or even more likely, I think that we just continue to track sideways in this sideways channel. So you can see our market, and I just might increase the scale here as I zoom in, because the daily movements have been getting shorter. You can see the market really has just been trading in a channel. I think that's kind of fair enough to say. We haven't wanted to really breach 6750 or thereabouts. We've tested it, one could argue, maybe back here. We've definitely tested it there. We tested it again there, and we tested it again quite recently, 4 or 5 days ago, last week. So we've tested 6750 at least 3 times, maybe 4 times, and each time we really just don't want to get through it. One could even say that we don't like spending a lot of time above 6725, right? And that's kind of the way I prefer to look at it. Here we bounced off it, and we only stuck our head above it during one day, and then we pulled back to sit on it. We couldn't even stay above it for more than a day here. We turned around here, and we couldn't do it for more than a day here as well. So the question is, as you can see today, we're obviously there. The question is, are we going to go through this time? I don't think so. I think what we're more likely to do is wait and see what happens overseas. Now, one of the funny things about our market is ultimately we need permission from the US to do anything. And we take that permission from what happens in the US overnight, and we take that permission from what their futures do during our session during the day, right? So our market will look to the US futures to decide, to kind of tell us how high we can go, how far we can fall, and whether or not we can rise or fall in the first place. And it's usually a combination of their futures during our session and what they do the night before that kind of, I would say, largely dictates what our market does. Now, you might not like that answer, and there's probably a bunch of people online who think that who would want to argue that point. Unfortunately, it can be just sometimes as simple as that. More often than not, sometimes it's simple as that from a short-term perspective. When you start talking more medium, long-term, you know, I'm talking like minimum a month to several months, that's when your kind of broader fundamentals play out, right? Now, obviously, you can have stock shock. You can have things like stimulus completely, you know, if they pass a stimulus bill, that can move a market overnight. But more often than not, these things are priced in when they occur just by the talk of it happening. Same with interest rate decisions or interest rate cuts. That's probably more the better word to use, because we haven't had an interest rate rally in quite some time, rise, I should say. But those things are kind of priced in as the market kind of talks about them. Yeah. So things that are going to move the market the next day are, you know, a missile being fired, Trump tweeting something crazy, the coronavirus, obviously. There's a whole bunch of things that can trigger an overnight fall or dump or rally. But more often than not, those kind of broader fundamentals play out over weeks or months, right? More likely months, I would say. So for me, in terms of bringing it back to reality, or bring it back to the current situation, I'd say the market, for it to kind of push through and to continue higher, we're going to need to see the US do that. Okay, this is the chart of the S&P 500, and we're going to, what's going to hopefully push through the S&P 500 into fresh all-time highs is a good reporting season, which starts Friday night our time. So it's their Friday, which is tomorrow night for us, if that makes sense. Right? Reporting seasons can move markets, as I'm sure you guys are all aware. That makes a lot of sense, right? And what's cool about this reporting season is that you've just had a whole year of really just unprecedented times. I don't need to tell you guys that. We've had lockdowns, we've got unbridled cases in America, as you know, you've got anti-vaxxers and anti-masks markers, and you've got conspiracy theorists, and you know, you've got this kind of melting pot overseas in America that has just allowed this virus to spread, for good or bad. I don't care about your political opinion, to be honest. The fact is that it's a very different story over there than it is locally, and that's really what I'm trying to highlight. And it's unique over there. They've got they can spend everyone in around the world, right? They've quantitative easing to infinity, negative interest rates. No one can compete with that. No one can outdove the Fed, is a way of saying it. And if you don't know what that means, I'm not going to explain it, but no one can spend more money than the USA can. So you've got this kind of duplicity, don't you? On one hand, you've got surging virus cases and deaths and unemployment, and you can't, they can't pass stimulus checks, like $600 is not enough to survive, kind of thing. And then on the other side of things, you've just got money, 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 right? And a complete disconnection of the S&P 500, which is, again, breaking, if we look at the chart, breaking into fresh all-time highs. Yeah, that was the high before the fall, and look where they are now. Golly gosh, right? You've got a complete disconnect between that and what their economy is at. And that should be reflected in companies' balance sheets, because that's what the S&P 500 is, right? The S&P 500 is the top 500 companies. And they're about to, well, not all of them, but the majority of them, I would say, if not, are going to report this reporting season. Now, what does that mean? Does that mean the market's going to rally even harder? Does it mean the market's going to crash? The problem is I don't know, and I'm not going to pretend to. If someone tells you, oh yeah, we should keep going after the reporting season, I would say that that's probably more likely than not, in my opinion, right? Reporting seasons in the US tend to be better than expected, and we can talk about why, but let's not get into that. They tend to be better than expected, and I don't expect really this time to be much different. I also think that a lot of, I think the market doesn't care too much how companies' balance sheets are looking. I think what they're going to be looking at is their forward guidance, right? What they're going to be saying, what they're going to be looking at is the company's probably going to come out and say, hey, it's been a terrible year, right? Because of the coronavirus. But if things keep going the way they're going, then we expect to have a much better year next year. I think that's what the market's going to look to, is its forward guidance, right? And I think there's a lot of companies who are going to say that their forward guidance is good, or they'll revise it at least. And the other side of it is that the market might simply not care about companies' balance sheets because there's just too much free money going around, right? The reason why the S&P 500 and the US market has broken consecutively into fresh all-time highs is not because companies are doing well. It's not because the economy is doing well. It's because there's just a bunch of free money out there at the moment for these businesses. So it may just completely ignore this reporting season and just continue to drift higher. I mean, that's a fair enough assumption as well. And there's probably a lot of bulls on right now, and I think there's a good reason to be bullish. I read in the AFR today, which I sent to Tim for tonight's presentation. Hopefully you got the email. An article which talked about how a lot of market analysts are expecting an increase of 15% on top of our market this year, right? An extra 15% on top of our market. So just to give you an idea, right, what that means, I mean, I know all of us can pick up a calculator and do math, so I'm going to do it for us, right? Our market closed at 67.15, right? No, whatever, right? It's the same number roughly as what it would have been on Christmas anyway, or New Year's anyway. And then if we add another 15%, we'll times that by 1.15, right? And that puts us at 77,222. That's up here. No. It's all the way, where is it? 77,22, up here somewhere. So if I'm not going to move my mouse, but this line up here, somewhere around here, right? They're expecting from down here all the way up here throughout next year, over the next 12 months. That's a very positive outlook, isn't it? Now, on the other hand, you do have a lot of people talk about recessions coming, or obviously the recession that's going on at the moment, and the market catching up to the economy as well. And you're always going to have that kind of talk, right? You're always going to have the bears out there. And that chorus will build over time. You'll notice that. I've noticed that it's starting to happen. But I think there's still a lot of good growth to happen before that does. Okay, so that's my market view in the shorter term. I could probably spend another 20 minutes talking about that because, there's a lot. There could be a lot more to cover. If you ever become a member of Trader Circle, Every day you can log on from 12 to 1 if you want to and watch a webcast that we run live. Old clients, new clients jump on, we go through the market, we look for trades, and we talk about what our view of the market is. So I run mine on Wednesdays, for example. Tim, the other presenter, he runs his on Tuesdays. I spend half of mine going through education, but I'm unique in that sense. But Tim will give, I don't know, he might spend 15 minutes, 20 minutes talking about where he thinks the market's going. He'll spend less time than what I would tonight, probably, just because clients are hearing this every day and there's a few assumptions that are made, obviously. And then he spends the rest of the time going through the market, looking for trades, talking about trade recommendations that we're currently in that we haven't recommended a close on, trades that clients are in that they might want advice on, or new trade ideas that they've seen in the market today, right? This type of webcast that we run is available to our clients Monday to Friday. So if you ever become a client, that'll be available to you. And if you can't make the 12 to 1 session, it's recorded and it's placed on the website that night for you to view if you want to. So I think despite the fact that our market's channeling and that we could channel for another, month, I mean, our market likes to channel, let's be honest. Look at this period. I mean, despite the fact that it's from here to here, look at this, from there to there, that's a long period of time. That's June to November, basically. That's a long period of time, albeit that's, quite a large range. How big a range is that? 5,800 to 6,200, so 400-point range. It's quite a large range. A lot broader than this, if not twice the size. But the market can channel for quite some time. So me saying that the channel's going to break soon, I'm not going to necessarily bank on that right now. I'll be waiting to see how that US reporting goes. Yeah, which is, again, tomorrow night, so I don't have to wait long. All right. If you've got any questions, type them in. If you want any clarification, let me know. If you feel uncomfortable doing that in this type of forum, that's okay. I can understand that. You can always contact me tomorrow, and you can send me an email, and I'm happy to answer your questions then as well. Okay. Or you can give me a call, or whatever's easier. So I'm kind of running out of time, but if you did want another quick tip, what you want to do as well, if you want to understand where the market's going, is you want to always have an idea of what the financials are doing and what the materials are doing. So this is the XFJ, right? And does anyone want to take a guess as to what F means? Right? It's the financial sector, which is the largest sector of our market, or it probably is it probably still is the largest sector. Represents about 30% roughly. It might only be 27 or something now. I don't know. Right? I haven't checked that in the past, 12 months. But it's the largest sector, I'm pretty sure. It's about 30%. And so if you want to know what the broader market's doing, it's good to know kind of what these guys are doing, right? Now, the financial index, the largest part of the financial index are the banks. So it's good to have a view on what ANZ's doing. It's good to have a view on what CBA is doing, Westpac, and NAB, of course, right? These are your main financials. And you'll see that they don't look too dissimilar to what the financials look like, right? There's a reason for that. So if you're finding it difficult to go, okay, well, what's the market doing? Then, you want to go look at the financials and go, okay, well, you can see it's channeling. Did it break today? Maybe it did. Maybe there's some strength there, right? Maybe that'll help our market push through. And then you want to marry it with what the materials are doing. So XMJ, right? XMJ is the materials. And that's companies like BHP, Rio Tinto, Fortescue Metals, FMG, right? There's major miners, yeah? That's the materials. And they make up about 25% roughly. So between the materials and the financials, it's about 50 to 55% of the market, roughly speaking. Okay, don't quote me on that because, yeah, it might not be... might not actually be accurate anymore, but it was about 6 to 12 months ago. So yeah, the materials you can see is the hero of our market, right? It's the absolute hero of our market, breaking into basically fresh highs. Yeah, so it's good stuff. The materials. That's obviously from baseline commodities rallying, and that's despite the Australian dollar going hard as well, right? So yeah, if you want to get a view on the materials, you want to get a view on the financials, you want to get a view on the XJO, and hopefully with a bit of practice, you can predict future market movements. All right, what I want to do, because I've taken a lot of time, I want to talk about some of the trades that we did over the holiday period. So I can show you the type of trade recommendations that we send to our clients, but really more importantly, how we actually trade a period of time, which is typically very quiet. You know, everyone's on holidays, the market's not doing anything, it's low volatility, right? Fall asleep, you know, it's nice and warm. It's a very snoozy period of time, and a lot of people go away from their desk and don't trade because of that. When, to be honest, Tim and I get excited about the Christmas period, not just because we get presents in our Christmas stockings or whatever you call it. It's because the market can be some great trading. It can be some great trading. And I'm going to show you some specific strategies that you can use during the holiday period or periods of sideways movement. I'm going to do that with my PowerPoint presentation. All right, hopefully this works. Right, so as you can see, all the strategies that we did profited from sideways movement. Now, how do you profit from sideways movement? You don't do it by buying shares because it's impossible. Well, if you know how to do it, I don't, right? We use options, which are a type of derivative. Should you trade options as a beginner? No, you shouldn't, because they're leveraged, which means they are inherently higher risk, and you need to know what you're doing. But if you know what you're doing, they are, in my opinion, the best tool that you can trade on our market because they provide the most flexibility. Now, if you're investing in the long term, buying shares is fine. Buying ETFs is fine. That makes a lot of sense to me because you're just going to buy and hold theoretically and not make too many adjustments. Maybe you're going to collect some dividends. That makes a lot of sense, right? But if you're short-term trading and you're looking to generate an income stream, if you're looking to take action every day or every week kind of thing, right? Take regular profits. If that's your goal, then doing it with shares is extremely limiting, in my opinion. Perfectly fine to start out that way. That makes a lot of sense to me. It's how a lot of people start. But ultimately, as you gain experience, you should be, in my opinion, shifting, or at least considering a style of derivative, right? And there's two main derivatives that we trade: options, as I said earlier, and the other is mini warrants. If you come along and do some education with us as a beginner, we'll teach you how to trade mini warrants first. And then if you want later on, you can learn about options. So the three recos or recommendations that I want to show you guys that we put out to our clients over the holiday period, an XJO Iron Condor, Rio Tinto Bull Call, and a Westpac Bull Call. I know they're stupid, funny names, right? But that's just what they're called. I didn't pick them, trust me. You can see that the time frames that the trades lasted, so the 23rd to the 7th of Jan, the 21st of December to the 7th of Jan here, and the 7th of Jan to the 14th, which is today, right? So that Westpac one, I actually wanted to show you guys as a current trade that we've got on, but we ended up closing it for a good profit anyway. So it is what it is. Now you might go, oh, you're just cherry picking all the profitable trades that you're in, and you know you're just showing us good trades. Well, one, obviously, I want to show you good trades. Why would I show you bad trades? It doesn't make any sense. Two, those are legit the only trades that we did over Christmas, bar a couple that we still have going on that are mini warrants, right? Now, mini warrants are strategies that cannot make money from sideways movement. So I don't want to show you those tonight. What I want to show you tonight are strategies that profit from sideways movement, because that's what the market does over Christmas. And every strategy we did during the holiday period that profits from sideways movement were profitable. And that's these ones that you see on the screen. Okay, I can say that 100%. And I can't lie. I wouldn't anyway. So each one was a good trade, and it makes sense because the market didn't go anywhere. So these all profit from sideways movement, and market went sideways. So it makes sense that they did well. So let's get stuck into it, right? The first one was the XJO Iron Condor, and I'm throwing you into the deep end here. This is a pretty hectic strategy to kind of wrap your head around, but right now I'm not going to necessarily ask you to understand the mechanics of it. I'd rather you just understand the concept of it, right? And if you want to learn how to do it properly, you can always come along and do some education with us. The benefit of an Iron Condor is that it profits from sideways movement only. And so you don't have to worry about if it goes up or down too much, right? If sometimes a stock is like a dog's breakfast. It's kind of like, oh my God, it's up for 2 days and it's down another day and it's down again, and it's up again. I just can't wrap my head around it. Well, the good thing about this strategy is you don't need to. You just kind of set a range that you want the stock to stay in for a particular period of time. The other cool thing about this strategy is if you get it right and you make your maximum profit, you also halve your costs as well, which is really cool. Now, the reason why we implemented this strategy at the time was because, again, the market's fairly quiet over Christmas, so we're looking at low volatility and low volume. The market was consolidating, and still is, at the top of the range, trading in a channel. There were 3 public holidays, which is basically free money for us. And again, if you don't understand the concept, that's okay. And there was no major news events during the trade. So when we went to implement the strategy, we looked at the news and all the fundamental stuff that that could kind of shock markets, and we couldn't see anything on the horizon during the period of the trade, right? Now, how it works is your profit and your risk is capped. So your profit is capped. You can only make X amount, right? And same with your losses, though. Your losses, you can only lose X amount at the worst case scenario kind of thing. The market could, dump, and there could be Armageddon, right? But your losses are capped, right? Your profit is limited to the credit that you receive, right? And in this circumstance, it was $1,800. Now, $1,800 based on the minimum unit size. So whenever we put out a recommendation to our clients, we go, this is a strategy and a trade that we like for these reasons. By the way, we don't think you should do less than this much. Now, obviously, you can do however much risk you want. And if you increase your risk, then you increase your potential profit. But obviously, you'll increase your potential loss as well, right? But we do recommend minimum unit sizes for every single recommendation. And that's what I'm going off here, okay? Clients trade with all different size trading banks. I have to kind of use a standard here, right? If that makes sense. Now, in order to make the maximum profit, the $1,800 in this scenario, the XJO had to stay between 6,800 and 6,525 by January 7th, which is the expiry. So that's what's interesting about options that is not like shares. Options have a day in which they finish, which is known as expiry day. So when we entered this trade, we knew that this trade could not go any longer than January 7th. Win, lose, draw, whatever scenario our trade is in, it's done by the January the 7th. Okay? Something else you're going to have to wrap your head around. So for us to make our maximum profit, the market had to be between 6,800 and 6,525 by January 7th. For our maximum loss to occur, like for us to lose the whole 4,200, the market had to be above 6,850 or below 6,475 by Jan 7th. Okay, so you had to get really excessive bullish movement or really excessive bearish movement by expiry day. So let's visualize that, right, on the chart. It had to be in between these two lines, 6,800 and 6,525. That's the range that we needed it to stay in. Our entry was this day here on December 23rd. So we'd already had a bit of sideways movement. And our exit was the 7th of January, the actual expiry day. Okay. This was our profitable zone. And because the market stayed in that zone, we made our maximum profit. These lines that I've got drawn in here show all the resistance and support levels that were nearby. And I mean, look, you can kind of see that already without those lines being there, and it kind of makes my screen look messy. But the point here is to go, there was a lot of resistance and a lot of support to keep the market trading in that green zone. Right? I hope that makes sense. Another trade that we did was Rio Tinto, right? Was a bull call spread. Now we actually entered this on the 21st, right? A couple of days before the XJO one. Now this is a bull call spread. The reasons why we did this trade is, well, the benefits of the trade, I should say, is because, again, it can profit from sideways movement, but it also profits from bullish movement. So the market can only go three ways, right? It can only go up, down, or sideways. We can make money on two of those directions, which is really cool. What that means is it provides a greater amount of flexibility, right? So we're expecting Rio to go up, right? And you saw the chart of the materials. It doesn't take a genius to say that mining stocks are going up, does it? So we went, okay, we think Rio is going to go up, but it's the Christmas period. So we are going to probably see sideways movement as well. So let's do a strategy that makes money if the stock goes up or sideways. Now, the reason why we chose Rio, the reason why we chose that day to trade it, right, in this particular context, was because iron ore, Rio's base commodity that it mines, right, had a 9% rally the Friday before, and that hadn't been priced in yet. Well, we didn't think it had been priced in yet. Okay. Low volatility, low volume, right? Christmas period, I've mentioned to you that before. It also broke a resistance, which I'll show you in a moment, and Rio was trading in an uptrend. So that's, I mean, there's more reasons, and we write analysis for our clients as to why we're suggesting a trade, but I'm just kind of dot pointing them for you and making it simple. Now, how it works is that the maximum, again, because we can make money on a bullish movement and a sideways movement, our profit is capped. Okay, that's what we're kind of giving up, right? There's no unlimited profit like, say, if you bought some shares, right? Because technically a stock can go to infinity. But if Rio went to $1 million for whatever reason, we would still only make our maximum profit, which is actually $2,000 in this, again, based on minimum unit size. Now, we suggested, we actually closed this not for its maximum, right? We made about a 33% profit, which is about $950 based on recommended minimum unit size. We recommended that to our clients, but that doesn't mean our clients necessarily listened. You know, our clients, because we've educated them, they actually know how to trade for themselves. So they know how to make decisions for themselves. They don't just listen, you know, they don't just do everything that we say. So we'll call them up and we'll say, hey, you know, that Rio trade that you're in, we're actually suggesting to all clients who are in it to close the trade. You're at a 33% profit, which is, we'll tell them what it is for them. They might have done more contracts or less or whatever. What do you want to do? And they might go, okay, I'll go have a look at it and I'll get back to you. Or they might say, yeah, just close it. I'm happy with that. Or they might say, no, I think Rio's going to continue to go higher. I'm going to go for that $2,000, that maximum, right? And that's why we insist on educating our clients, so they can actually make decisions for themselves, right? But the point is that Rio could go up, it could go sideways, and the expiry of the trade was the 21st of Jan. The maximum risk on the trade was 2,800. So it's not a bad risk for reward ratio, in my opinion, right? You might disagree, I don't know, but I think that's a pretty good risk to reward ratio. But to lose the entire $2,800, Rio would have to be below 112 by the 21st of Jan. And obviously, we try to mitigate our risk. I mean, sometimes it just gets away from you, and there's not really much you can do. That happens, and you've got to be aware that happens. But we like to be very conscientious about risk management. If the stock goes against us, we'll use technical stops, right? We'll have triggers to tell us to get out before that 2,800 is realized, if you know what I mean. So again, visually, just to show you what it looks like, we entered there, closed there. When I said we broke resistance, that's the resistance level there that it broke through. Admittedly, it came back in the very next day, but again, we hedged for the sideways movement. We had a feeling it could go sideways. So we would have been happy if it just shot up. That would have been totally fine. We would have just closed the trade. But we had a feeling that it could also do this, and that's exactly what it did. There's also a really nice uptrend on Rio, and you can see the uptrend has several touch points, and it bounced off again here, luckily, or maybe not luckily, as predicted, and continued higher, right? So this is our green zone. We would have made money at any point up until the 21st if it was in this green zone, right? With our maximum profit well, maximum profit wasn't obtained. It would have had to have been the 21st, but anyway, that's beside the point. As long as it was in this green zone, we would have been fine, basically, and hence why, you know, you can actually even fall a little bit and you still be all right. But again, we're looking for that bullish movement. Sideways movement still profitable for us. It allows us to be flexible in our timing, right? That's kind of where that's the words I was trying to get at before. Finally, the last trade that I wanted to go through, the reason why I included this trade, it's also a bull call spread, was because we were still in it. And I wanted to give you another options trade that benefits from sideways movement that we're still in. But again, it was like later in the day, we ended up just closing this trade or suggesting the close to our clients. So that's why this is in here, but I guess it's still a good exercise, right? Same reasons. It profits from sideways movement, bullish movement, and it provides a lot of flexibility on your timing. That's why we like this strategy. Why we traded it on Westpac was because of strengthening. There's a strengthening housing market at the moment, rising longer-term interest rates on the books. It was breaking out of a pennant triangle pattern, if you understand your technicals, and it's trading in an uptrend, right? Again, we give more detailed analysis to our clients. This is just kind of dot pointing. How it works is the maximum profit we could have made was 2,800, but the maximum risk was 3,600, right? Again, our profit is capped. We ended up taking a nice 33% profit today, roughly $1,200, give or take, based again on minimum unit size. Westpac could have traveled sideways or go higher, and the expiry was for the 18th of Feb, right? The expiry was the 18th of Feb. For Westpac to fail, it would have occurred for us to lose our maximum risk if it was below $19 by the 18th of Feb. That's meant to say Westpac, not RIO, sorry. So if it fell down to 1901 by the 18th of February, you would lose the maximum 3,600, okay? All right, so that was the day we entered. Today was the day we closed. That's today's chart. You can see there's quite a key level of support through here, support there, maybe a bit of resistance through there as well, which is good to see. Funnily enough, it actually got to exactly where our target was, right? We said that the target was around $21, and that's where it got to today. That was the target there, the resistance level, which it got to, which is pretty cool. There's the uptrend line, plenty of touch points, which is good to see. It actually goes further back, but I needed a more zoomed in chart. And all our indicators suggested that it was going to go up all the other squiggly lines you see on the page as well. Oh, sorry, it broke out of this pennant pattern. That's what I was saying before, right? You can see the counter trend here, broke through. So it's a nice little bullish entry signal, right? But again, rather than just doing a directional trade, we wanted to be able to hedge for time. So this was our green zone, and we ended up taking a nice profit. Now, what I want to do before I continue and talk about the type of education we run and why people trade and all that type of stuff, I want to pass it over to Tim. I've taken up way too much time. I'm sorry about that, but you can tell I get really into it. Let me just pass it along to Tim, and then I'll jump on a bit later. Hang on a sec.
Thanks, guys. Can I just get a quick sound check? Can you all hear me okay?
Yep, can you?
Yep, perfect. Okay, just share my screen. I'll get started. Okay, should be able to see my screen now as well. Is that right? I'm assuming so. All right, so thank you all for jumping on tonight. Kara has already gone through quite a bit of what I was already going to say about the actual market itself. I'll just add a few things. Like there's a couple of seasonal type patterns that happen in our market. One of those patterns is the US elections. The other is obviously the Christmas rally, right? So what tends to happen is you do get that rally into Christmas time. If you've been around markets, you would have heard of this before, right? But what many people don't talk about is if there's not a lot of news around and there's nothing big happening, you tend to get a really sideways period through those 2 weeks of Christmas. And that's why we did that short Iron Condor. And it's a strategy we do most Christmas times. It's not a standard thing we always will do. Like if there is a particular bit of news we expect to come out over that period or something big's happening. I remember one year the US hit the debt ceiling and the market was quite volatile through Christmas, right? It depends what's happening, but more times than not, we will be doing those types of strategies through the Christmas time, purely to take advantage of those public holidays, right? So that short iron condor I showed you, I'll show you another one tonight quickly as well that you could do on the market now. I might be still waiting a little bit longer to see what happens with this US election. But anyway, I'll show you a few ideas on the market. But the other pattern I want to talk about, and this backs up what Caro was saying before about the market having another 15% in it easily this year. It's the US election pattern that we see. Now, I've gone back over the last 3 or 4 US elections, and what's happened is after the election, from the low of that November to the end of the next year, you tend to get anywhere between a 30 to 40% movement on their major index. All right, so the S&P 500. And we follow, right? We might not get as much percentage movement. But if you have a look at the movement they've had from from the sort of, around that election time, which was through here, to current day right now, they've moved roughly 16%. So what's that telling you guys? There's at least another 20% on the S&P 500 between now and the end of this year, right? That's looking at that sort of seasonal pattern. I won't say 20%. I'm not going to be married to that. Could be 15, could be 10, right? But what I'm saying is there's still plenty of upward movement in this market. There's still plenty of potential for it. And I know that, things are strange out there at the moment with COVID. I know that valuations in the US are stretched, especially through certain sectors, tech and communication services. There's some ridiculous valuations out there, right? But the big thing about this market right now is stimulus, and there's a profound amount of stimulus being pumped into the US system. All right, the Fed was not shy in just opening up their balance sheet and spending after that big crash in Feb and March last year. Okay, the reason why we were able to rebound and make up all of that crash already and some is all the Fed. It's all the Fed spending. That's all it is, guys. Because if you zoom out and have a look at the movement since the GFC, right, that was the GFC, which is tiny compared to what we've seen through here. But guess what? You had Fed spending, QE 1, 2, and 3, right? That's what made their market jump so much. Now, through that period, we didn't do the same type of quantitative easing in Australia. But the RBA is now doing a similar form as what the Fed is doing, right? But just not as big. So that's the difference this time around. And that's why the XJO, when you have a look at it, if anything, is still, for me, undervalued, right? In compared to, where we should be, all right? We should actually be, and I'll just switch over to a weekly chart so I can show you what I want to show you properly. Oh, sorry. What happened there? That's better. I don't need the weekly chart. It's just in a strange position on my chart. We should actually be beyond 7,200 by now, in my opinion. And I'm not. I sound pretty certain in that, don't I? But look, at the end of the day, you've got more money in the Australian system now than what we did pre-COVID. But nobody's talking about this. Not clearly enough, anyway. You've got a huge budget spend coming from the government, okay, infrastructure spending. That's all going to hit the economy this year. And you've got the RBA also doing a similar sort of, QE type spend, right? So look, we actually should be getting beyond 7,200. There is more money being pumped into the system. We are more accommodative than what we were sort of at the beginning of last year and the previous years beyond that. And what we do know, and what gives me a lot of comfort for at least this year, is that the RBA and the Fed are not going to become hawkish or neutral. They're going to remain very dovish for a while to come, especially the Fed. And the Fed has said that they're going to be extremely accommodative, even if inflation goes up above their target. They're trying to get inflation above their target, and they want to keep it there for a while. God, that's going to take a while. Yeah, that doesn't happen quickly, right? We've seen it. We've seen low interest rates and negative interest rates in Japan not achieve the outcome of inflation. So this stimulus talk, this pumping money into the system thing, it's not going to change in the next 6 months, right? It's not going to change in the next 12 months, all right? So I still have strong faith, and I agree with that article on the AFR that there's easily another 15% on our market, okay? And if you actually look at the valuations of the Australian market and look at some of the stocks on the Australian market, there's still plenty of good quality, cheap companies on our market. Very good value stocks, okay? Not these huge high growth afterpays and all that sort of stuff. I'm talking actual value stocks. And this, I think, is going to be the year for value stocks to come back, right? So we're already starting to see the miners, the banks starting to run, you know, your infrastructure stocks starting to run. All those areas are starting to run now because everybody's expecting all that big stimulus spend to come in and hit those types of companies, right? So your CSRs, your James Hardys, they've already run, right? But go have a look at your miners because your materials are going to be in high demand over the next few years with all this infrastructure spending, right? Iron ore is going to be in high demand. It's at $170 odd US. It's crazy stuff, right? And you got Fortescue still trading at maybe a 12 or 13 PE, right? So there's still really cheap stocks. Is there some expensive ones? Is there a lot of overvalued stocks still? Yes. But there's still plenty of cheap things to rotate into, right? And as long as there's some cheap stocks to rotate into, I'm not expecting another big crash. Now, is there another crash on the table for our market? Maybe 10%? Of course. For the US, 10%? Of course. At any point of time, guys, the news can just shift and things can get really negative, and then all of a sudden you get this quick 10% crash in the market. It happens once or twice a year. That's normal, right? So do I expect a pullback? Yes. Could we see our market give back 10% at any point between now and the next 6 months? Of course. It's always on the table. We're always looking for signs of that. It's always in the back of our mind as a trader, right? But the underlying longer term trend is up. Okay, we can see that. And look, that for me is going to, I think, definitely going to lead us into all-time highs at some point, as long as nothing changes from a stimulus point of view, right? We'll have our pullbacks along the way, and who knows, we might be already due for one. We're already a fair whack away from that trend line now. We could find ourselves back on it again. But nonetheless, you know, sideways phase, wait for the breakout. All right, so I won't talk too much more about market views. I think Caro's already covered quite a bit. I've said my piece. I'm still very, very bullish this market from a medium to long-term point of view. Short-term point of view, a little bit uncertain with this sideways movement happening. I still feel the break will be to the upside, but how do you time that, guys? Like, you just can't. You've just got to wait for it to break and then make sure you set your trades up. So what I'm going to show you is a couple of things tonight. First things first is, if you're in the camp that you think the market's going to stay sideways for at least maybe another sort of couple of weeks, okay, I've got a strategy here for you. It's a short Iron Condor. This is the same strategy we did over Christmas. The credit's a little bit leaner than what we got over Christmas time, okay? But I'll just quickly show you this. Now, what I've got in front of you is an options calculator. It allows me to put various different option strikes in here to build strategies and then show you a payoff, okay? So you can get a feeling of the type of payoff. Now, I'm not going to go through the strategy in too much detail. All I'm going to say is I want between now and the 28th of January, which is the expiry of these options, between now and the 28th of January, I want to keep the XJO between 69.50 and actually, sorry, I was going to drop that down just a little bit. 69 and 69.50. Yeah, that's a little bit better. So the credit wasn't high enough on the top end there. That's looking a bit better. All right, so 69, 69.50, 66, 65.50 is the range I'd want it to stay in for 2 weeks. Now, I'll show you that on the chart. So what I've allowed for is the XJO to come back down and test this support level. I've also allowed some breathing space on the top end because I do feel the underlying trend is up and that could break higher. But what I'm betting on is that it can't get above 69 in the next 2 weeks. So that, but to these two blue lines, if you think the XJO is going to stay between those two blue lines for the next 2 weeks, this is a good strategy to consider. Okay, so I've given myself a lot of breathing space, and you can see there's a very strong support level through here. For that support level to break, we're going to have some seriously negative news. Okay, at this stage, if Trump being impeached again is not going to see the market fall, I don't know what will, right? If that happened a couple of years ago, this market would have already been down quite a bit, right? It's funny how the mood of the market and what it looks at changes so quickly. I think the market's going to be optimistic coming into Joe Biden being sworn in next week. I think him talking about more stimulus and more checks and all that sort of stuff is going to be fairly positive for the market. But we all know how long it can take for the US to pass any type of physical stimulus. It took them 4 months last year to do it. Look, it could take them another 2 months, which means that's where the volatility can come in, right? But I still feel like the undertone's very, very positive, and that's why I've allowed plenty of upside breathing space on this short Iron Condor. All right, so just to show you the payoff, right? So what happens here is it's all about time decay. So you can see here, as long as it goes sideways and stays between those levels, 69 and 66, I can make $1,800 there. That's my maximum profit I can make. If it jumps too far, though, you can see I can lose $4,188. That's my maximum I can lose on this trade. And every strategy we do with options, guys, we always have a limited risk. We never, ever take an unlimited risk strategy using options. It's just not what we do, right? We actually don't allow our clients to do unlimited risk trades at all using options. They're banned, right? Those strategies are completely banned with us. So this is a limited risk trade. You can't lose any more than 4,200. And guess what? You just need the market to go sideways. And this is our go-to strategy when the market does this. Yeah. When the market just does nothing and just whips around, and it can do that for very long periods of time. I'll go back and show you. Sorry, just fix this up. How do you make money picking direction through a market like that, guys? Right? 6 months of sideways movement. And not much movement at that either, right? So these strategies are good to have in your arsenals. They're not ones we use all the time. They're only ones that we use when we feel the market's going to continue to do this type of sideways move. I'm in two minds on the XJO at the moment, purely because of Joe Biden's being sworn into next week. You got US reporting. There's just a bit of news there that I want to get through before I go and put one more of these on personally. But if you're in the camp of thinking the market's going to go sideways for the next 2 weeks, this is a good setup, right? Good credit, good levels. It's all there, right? Volatility level, everything's there, guys. Okay. So look, that's one example of a strategy you could be doing at the moment, more short-term orientated. I'll show you another longer-term idea that I've got at the moment. This is called a calendar spread. I've bought an option all the way out to May, so I can hold this trade all the way out to May if I choose to, right? So this strategy is good if you're bullish, but you don't want to have that. You don't know the perfect timing of the breakout, and you don't want to have to wait and try and time it. You can actually just set this trade and forget if you want to, and just all you have to do is manage one side of the trade as you hit expiry, depending on what the market does will depend on what you do with it. And this is the type of thing I help clients with on a daily basis, guys, right? They tell me their view, and I help them build strategies like this and help them manage it as we go along. So with this trade, basically what happens is if it goes dead sideways, you make a little bit of money, not a lot, but you make money out of it through to the February expiry on the sold leg. All right, see how that's a Feb and that's a May. All right, so what happens in Feb, this leg is going to expire. Okay, and then we'll do something more with the trade. Now, if it comes up and it pushes hard, okay, above the 69, which is the sold leg, what we'll do on expiry day is just take profit, and we could make up to easily $2,000 on that trade, okay, with a 4,800 risk. So that's not bad, right? But let's just say it stays below 6,900. What happens is we keep this credit here. Okay, this premium on the sold leg, we keep that credit, and then we sell another one again for the March expiry. And then if that expires worthless, we'll sell again for the April and so on and so forth. Yeah, so it gives you flexibility with this trade. So if it does keep going sideways, we keep selling an option on top of our bought over and over and over again. Okay, getting more and more money in from the market. We get gaining more credits, gain more credits, gain more credits. As we're gaining more credits each month, we're reducing our risk and increasing our probability increasing our profitability on the trade when it finally goes up. So, you know, at this point of time, guys, the trade profitability is capped off at around the 1,800 2 grand mark, right? That's a big move that I've put the 8,000, right? But it capped off around the 2 grand mark. But if we sell again, then that goes up to maybe 3 grand potential profit. We sell again and go up to 4 grand potential profit. This is a longer term trade where we're altering that sold leg each month to increase that profitability each month. Right, it's called the calendar spread. Well, it's our version of a calendar spread. If you go have a look at a traditional calendar spread, you know, the setup's a little bit different. I'll leave you with one more idea, guys. I'm aware of the time; it's getting a little bit late, so I'll hand you back to Caro after this one more idea. So CSL, look, I've got a sharp eye on this at the moment. I'm not saying get into this trade today. This is something that we still need the technicals to line up on, but this will be likely one of the next recommendations out if the technicals break to the way I want them to. Basically, CSL I think's been sort of sold down quite a bit because there's been a big question mark behind the vaccine that they're developing and whether it's going to be effective enough for herd immunity. The move behind that changed in the news dramatically this morning for me. They're talking a lot more positively about it, and it really does sound like the Australian government is still going to be going ahead with that particular vaccine. The other thing that this stock hasn't liked is the Aussie dollar going up quite a bit. But nonetheless, guys, you're back to a key level. That's a very strong level of support now. All of our indicators are suggesting it heavily oversold. You know, I've seen this stock do this before, and eventually it kicks up quite a bit, right? This is very, very common, these big pullbacks for CSL, but it tends to be a powerhouse of a stock. Now, most analyst targets are around 300 to 310. Okay, that I've seen out there at the moment. So for me, it's looking like a reasonable buy down here. So I'm just waiting for those technicals. I want to see that downtrend break. I never trade against the trend. This is a sideways trend long term. I want to prove that that trend's still in play before I even consider doing this strategy. But once we do get that confirmation, what I've set up here is a bull call spread, and it's a March expiry. So I've got quite a few months to get my move. I could even kick that out to April if I want to. In fact, I might just do that. I might just kick that out to April. With this trade, I'm putting down, you know, 2.5 grand. You can put less, you can put more. It's up to you. But essentially, if you think it's going to recover back up quite a bit near that 300 mark, the good thing about this strategy is you can easily more than double your money, right? So this is a bit more of an aggressive strategy than those time decay trades I was showing you before. Now, with this trade, if it goes sideways, it loses money. But if you get the move right, the sideways actually makes you more money, right? So timing is still the key, because you can see here, if it does move aggressively, time gives me more profit, right? 4,600 versus 4 grand, okay? But nonetheless, let's talk realistic here. I'm thinking back to 300 over a couple of months, right? So if I put down 2.5 and I get back 3, if I put down 2.5 grand risk and I make 3 grand profit on the trade, I'm extremely happy, right? It's more than 100%. So very, very happy with a return like that. And I don't have to sit around and worry about the trade too much, because at the end of the day, I've got all the way out to April, if I need it, to wait for that movement. So we're talking about a move back up to 300 for me to, you know, make quite a bit. Now, if you get the timing right, that can happen in a week. If you don't get the timing right, it might take a few months. And that's why I want that flexibility. I want to be able to make more than a 20-30% profit on a big move. That's why I've set it up that way. But what I have to do is get timing, right, to a certain degree right, because what I don't want to do is have a further downward movement. I don't mind the sideways as long as it eventually goes up, but downward movement, I'm going to lose my 2.5 grand, aren't I, right? So I need that to pop. So what I've got to do is wait for a technical signal that this downtrend's breaking. Once I get that technical signal, then I'll enter into a trade similar to what I've just built. So that's just in reserve, waiting for me to get that right technical signal. All right. One more, actually, just quickly sneak this in. S32 is the other one that I've got an eye on right now, guys. Okay, whilst the other miners are pulling back, BHP, RIO, and that, S32 has just broken through a key level of resistance and showing bullish signals. Okay, so I've priced up a quick mini warrant there. I actually, in fact, have a mini warrant on S32. Been on it for a while now. It's just still sitting there. Not this particular strike, one a little bit low because I've been in it for a while, but this is another one to consider, guys. 2.5 gram risk. Even just forget about the risk. Similar sort of payoff situation here. If it goes up 10% in share price movement, so from $2.73 to $3, I make 32% on my mini warrant rather than 10% on the stock, right? This is directional trading, guys, short term. This is leverage. Okay, that's how you gain some leverage rather than just buying stock. If you want to know more about mini warrants, guys, honestly, you should jump on our YouTube channel. I'll quickly throw it into the chat box before the session ends. There's a 3-part webcast that we did last year that covers all of this stuff and talks about mini warrants in detail. Jump on there, watch that. It'll give you a bit of education on this stuff if you're not educated on it. But nonetheless, look, from a dollar point of view, you know, on my, oh, sorry, it doesn't like to be, no, I knew that was going to happen. It's because I set it up earlier. Anyway, you'd make 32% if it got back to $3, guys, and it could easily get back up close to those levels the way this is trending at the moment, right? You got confirmation of a nice accelerated trend through here, a nice steep trend with plenty to go, in my opinion. Because, you know, it's nowhere near really where it could be. So it had a huge sell down even before COVID, and these guys are starting to turn things around a little bit. So I like them technically and fundamentally. Alrighty, I'll leave you there, guys. I'm going to hand you back to Caro real quick. He's going to have a quick chat about how to get involved in trading, okay, and the first steps that you should be taking if you haven't gotten into trading yet and there's something you are looking to get into. So look, I know we're running a little bit over time tonight, but you know there's a wealth of knowledge there. Please, you know, listen in for the next 10-15 minutes. I'll, in the Q&A box, put in a link over to our YouTube channel. And yeah, jump onto that 3-part webcast if you want a bit of education on this stuff as well, right? If you want to get down the basics. All right, I'll hand you back over to Caro now. Thanks for listening in.
All right, you should be able to hear me, and you should be able to see my screen. Oh no, wait. Now you should be able to see my screen. All right. Well, we've gone way over time. Thank you for being patient with us. There's obviously a lot to talk about. There's a lot we like to share with people who aren't clients and for the clients that are on tonight. I just want to take the last hopefully 10 minutes just to kind of show you the type of reasons why people trade, the type of things they need to know in order to be a successful trader, and also the beginner's course that we run, just to give you an outline of that as well, in case you're wondering how to get involved. So on the screen there, you can see there's probably a bunch of reasons why people want to become full-time traders. It could be simply because you want to spend more time with your kids or hobbies or passions. You want to move away from manual labor. These are all kind of things that I've heard from clients in the past as to why they want to become a full-time trader. But most of us actually just end up starting out being part-time traders, light traders. Tim, myself, other people who work in the business, other people who are online. You'll find that you'll end up here first, and then as time goes on, you'll become a full-time trader, maybe, right? And it's just good to be able to generate a secondary income stream. That's a really good goal to have, perhaps for holidays or Christmas shopping, considering Christmas has just been, or perhaps to pay off your mortgage, right? Another reason that I've heard before. Whatever your reason is, you need to consolidate the goals that you have going into the market. And over time, what we found here at Trader Circle, there's some qualities that all our successful clients share. And I thought I would let you know what that is, right? So that you can hopefully build some of those qualities because I think you need them in order to be successful. Probably the number one quality that you need to have is to be consistent. I put that as number one for a reason. The best traders are consistent traders. The best traders are consistent traders. Now, my dog is growling at something outside, so I'm sorry if she barks. I am doing this from home. So if you do get interrupted by a Jack Russell bark, I'm sorry for that. But yes, you need to be consistent in your approach. You need to be disciplined, right? So every good trader has a set of trading rules. They might be really tight, they might be really loose. You need to be disciplined. Discipline also comes into closing trades, right? Sometimes the hardest decisions that you make is actually not getting into a trade, it's actually getting out of a trade, whether it be for a profit or a loss, and you need to be disciplined in order to be able to do that. You need to be independent. Now, I mentioned earlier, as I was talking, that we educate our clients, right? We don't just let you come along and do trading if you don't know what you're doing. And the reason is because we think the best trader for you is you, not us. You know your own risk tolerances. We don't. So the best traders that we have trading with us at the moment or historically and probably in the future are the ones who are independent. You've got to be driven to succeed. That's a no-brainer. And you need to enjoy it, right? I put that at the end there because sometimes you forget. Trading shouldn't be a chore. It shouldn't be something that you have to drag yourself to do. It should be something that's really, really fun, right? It should be something that you enjoy. So if you can see yourself having those types of qualities, then perhaps trading something that you can consider. Now, in order to be a successful trader, you need to be good at 3 things. I know that sounds really simplistic, but it actually is the reality. You need to be able to pick direction, you need to be able to have strategies under your belt, and you need to be able to manage your risk effectively. If you can do all those 3 things well, I guarantee you will make money. The problem is, not everyone can do these 3 things well. They might be able to do one of these things well, but they can't do the other 2 well. And you do need to be able to do the other 2. You need to be able to do all 3 well, not just one of them or 2 of them. What brings all these things together is a set of trading rules. You need to have a set of trading rules, again, that can be really loose, they can be really tight. It doesn't, each to their own, horses for courses, as I always say. But you need to have a set of trading rules that you follow that bring a discipline to your trading. And that encompasses these 3 main pillars or these 3 main elements. Does that make sense to everyone? Now, we run a course that focuses on that. It's called Technical Trading for the Australian Market, and I'm going to spend the next 5 minutes going through it, if that's okay. This program's suitable for beginners, but it's also suitable for experienced traders. Now, that might sound a bit weird. It is a beginner's course, but if you're an experienced trader and you come along and do the course and you learn, say, one thing, let's say you learn one thing that helps you make money, then it's worth it, isn't it? Because trading is something you do for the rest of your life. It's not something that it's not a get-rich-quick scheme. Those types of things don't work. Get-rich-quick doesn't work. Just buy Afterpay doesn't work. There's no longevity in it. So even if you're an experienced trader, right, and maybe things aren't working for you, or maybe things are, coming along and doing this course and picking up even if you just pick up one thing that helps you, it definitely becomes worth it. This program is about teaching you the core foundations. It's about fast-tracking your learning to have a confident and efficient outcome. It's been designed by professional traders and educators. So we're not just professionals when it comes to trading, we're actually also professionals when it comes to educating, and that's really important. And the core focus of this program is to support you and to develop a relationship with you so that we can have mutual success. If we can help you become a good trader, we can help you make money, then you're going to continue to stay a client. You're going to continue to trade through us, right? You're going to continue to use our services. Now, this course, we only take in 10 people, right? So we don't bring in hundreds of people each year, right? We only bring in, say, 10 people roughly to each course, and we run them maybe once every month and a half to a couple of months, depending on how, holidays and all that type of stuff, right? So what we're really about is bringing small groups of people and teaching them how to trade and then supporting them. And it begins with a 2-day face-to-face trading session with the co-founder of Trader Circle, Carlo Castellano. Now, I mentioned his name earlier. He was the head of our trading desk, but he's basically retired now, Carlo. Carlo has been teaching and trading for over 20 years. And although he was the head of our trading desk 4 or 5 years ago, he decided to retire and basically trade from home. It's great though, because he still runs our education. So you've got actually a rare opportunity to learn from a professional trader as well as a professional educator. Right? Carlo's taught locally, he's taught overseas in America, he's taught all around the world, basically. What you're going to learn during that face-to-face session or that 2-day session is his exact trading rules. They're the rules that I learned. They're the rules that Tim learned, that we've evolved to suit ourselves, right? But that we started, that we learned when we first started. Now, with COVID, the face-to-face is difficult for a lot of people. Some people just don't feel comfortable doing face-to-face, and we understand that. So we do have live stream spots available as well. So if you're interstate, if you're in New South Wales or Queensland or whatever, you can actually do this at home if you want to. You have to lock out the 2 days though. You know, we don't want kids running around in the background distracting you. If you can help it, right? You do have to lock those 2 days out, right? And we always do them on the weekend. What we'll cover during that 2-day session, or what Carlo will teach you during that 2-day session, are those 3 pillars that you need to be good at in order to be a successful trader. And he'll teach them to you in the context of his own trading rules. So his trading rules will cover basically from start to finish, finding a trade, choosing the strategy, and then managing the risk until completion. The picking direction component will focus mainly on technical analysis, which we believe is perfect for short-term trading. Even if you're more of a longer-term share investment background, you can actually use technical analysis to help time your entries. Clients have told me in the past, as I said earlier, clients have told me in the past that it's actually helped them be more profitable with their longer-term trading, the technical analysis that we teach them. We'll teach you how to implement different strategies, right? So as a trader, again, just buying and selling shares isn't necessarily the best approach if you want to be able to make, generate an income stream or make consistent profits. Markets just don't go up, they go down. So you need a way to be able to trade bearish markets. So we'll teach you mini warrants. I didn't go through mini warrants tonight. We didn't have time. It wasn't necessarily a suitable instrument to be trading over the Christmas period, even though we did suggest mini warrants to our clients, right? We have a whole bunch of mini warrant trades open at the moment, but the market hasn't really gone anywhere for them to run their course. But mini warrants are a great tool to be able to trade bullish markets as well as bearish markets, and we'll teach you how to trade them, and they're also leveraged. Leveraged allows you to make more money quicker. You can also lose more money quicker. So you need to know what you're doing, right? Which hence the education. Finally, Carlo will cover risk management, right? You're not going to get every trade right. We certainly don't. You therefore need to be able to manage your risk effectively. You want to make sure that the trades that you get wrong don't wipe out the profits and, more importantly, your trading bank of the ones you get right. So we'll teach you, hopefully, how to manage your risk effectively and preserve your capital. Following the 2-day face-to-face, we give you 8 weeks access to our members area and 8 weeks access to all of our training videos, right? So all the material that we cover in that 2-day face-to-face, I've recorded and Tim have recorded as training videos that cover those core topics that you can rewatch and revise. You get access to all our daily webcasts. So sessions where, as I mentioned earlier, from 12 to 1, where we go through the market, we look for trades, we talk about what's going on in the market, right? You have access to those. If you can't attend the 12 to 1 session, they're recorded. We give you daily market updates 3 times a day from a trader's perspective. We'll give you trade recommendations, a whole bunch of access to fundamental data. There's a whole bunch of resources that we give you access to in our members area. We'll give you all our technology, including the trading software you saw me use earlier. We've got options calculators, we've got mini warrants calculators, we've got a whole bunch of technology to assist you in your decision making, right? You can also trade online through them, bring your stock across, access your portfolio, no problem. And more importantly, and this is where what separates us from every other business, is you get your own personal trainer. Our business is built on supporting clients. We're a small business. There's like 10 of us in the office, right? I think there's 8 of us in the office, and some work from home, right? We're a small business. For us to navigate this market, for us to survive in this environment up against major players like Commonwealth Bank and E-Trade and things like that, for us to survive, we have to provide good service. And that's what we believe in. We believe on giving you good service. We provide more support than anyone else in Australia, I can comfortably say. And part of how we express that is by giving you your own personal trainer when you're learning. So you're there, that trainer is there for you basically 9 to 5. You can call them as many times a day as you like. They'll help you practice your trading. They'll help you with giving you trade ideas. They'll make sure you're not making those silly mistakes that you're prone to making as a beginner, right? They're there for you 100% to make sure that you get good at this. And when you're ready, they're there to help you transition to live trading. That is a large part of my job, for example. So there's a good chance that I will help you with your trading. I'll be your personal trainer. During that 8-week period, we also run a paper trading competition, right? The winner gets a prize, right? We just want you to have some skin in the game. We want the 8 weeks of paper trading not just to mean your own personal development, but also to mean a prize at the end as well. It's the idea there is to try and simulate real trading. Yeah, so I can be your broker in a sense that I can place trades for you if you want to. You can also submit trades online into the paper trading competition, and the person with the most profit at the end of it wins. Right? Work with your trainer to win, by the way. Use them. Once you're ready, your trainer's there to help you transition to live trading. So it might be during that 8 weeks, it might be after that 8 weeks. Each person's kind of different, especially if you've already got experience, it's probably going to be sooner. We'll help you, you might call up and say, hey, I've seen a trade on BHP, and your trainer will go, okay, well, let's just make sure it fits all the rules, step 1, step 2, step 3, etc. And by the end of the conversation, if you want to place the trade, you might be at that point where you're ready to put real money on it, and we'll actually be able to help you facilitate that as well. Now, in terms of the pricing, you pay a deposit of $995. You pay one more payment of $995 a month later, which means the total investment of this course is $1990. That includes the 2-day face-to-face, right, or live stream if you prefer, 2 months of online training, 2 months access to your own personal trainer, 2 months access to trade recommendations, and 2 months access to the trading platform and all the technology. That's outstanding value for the amount of support you get. The next dates are the 6th and 7th February. We only have 2 spots left. There might only be 1, but last I checked, which was yesterday, we had 2 spots left. And the one after that, if you can't make that or it's booked out, is the 27th and 28th of March. Right? These sessions always book out, right? They usually book out much more in advance than, usually they book out about a month in advance, a month and a half in advance. If you want to jump on the February ones, by all means. Otherwise, you've got the 27th and 28th of March. So thank you very much for listening to my little plug at the end there. Look, our education, we don't really make money from. We kind of break even on it. We're not here to make money from our education, not really. The idea of our education is to teach you how to trade, because if we can help you become successful, then you're going to continue to trade through us. And that's what pays our bills. That's what keeps our doors open, right? So we want to invest time and effort into you. We want to give you as much support. We want you to get good at this. It's another reason why we only take in a small group of people, right? By taking in only 10 people, we can focus on you as an individual much more. We can, you can't fall asleep at the back of the room, you know what I mean? There's no hiding in a group of 10, right? But at the same time, we can still keep a group dynamic. So think about it. If you're a beginner or you're an experienced trader and you want to get good at what you're doing, or you want to at least try your hand at trading, then this is the best place to start, in my opinion. It's a program that we've developed over the past like 20 years, and it's only gotten better. You can speak to my colleague Jared, who's our market advocate, if you're interested, or you can simply type in book into the chat box and we'll reserve your space. If you'd like some more information, type more info. What Tim has done, he's linked in a link there into our YouTube channel. Please jump on, like, and subscribe that whole old chestnut. Like and subscribe our YouTube channel, and you can watch our 3-part webinar where we go through everything that you need to know in order to be a successful trader. Right? That's like a 4-hour thing. We can't squeeze everything into 1 or 2 hours. We've really had to go expansive on it. If you've got any questions, please type them in now. We've gone way over time, about 20 minutes to half an hour over time. Thank you very much for joining us tonight. We really, appreciate the fact that you've taken an hour and a half out of your busy schedule and out of your evening, your rest time, to have a listen to what we have to say. We do run other webcasts. Sometimes they're more advanced. Sometimes they're on specific topics. We like to run one every couple of weeks, every few weeks, basically, right? It's usually myself or Tim. If it's from Emerald Financial, it might be Tim and Sam, might be the owner of the business, Michael and Sam. So, we like to get other people from the business to talk about their kind of special areas as well. It's well worth checking out our other webcasts as well, and they're always recorded in case you can't attend them live. After the 2 months, Daniel, the support doesn't end, right? So again, our education is a stepping stone. It's a means to an end in a lot of ways. You'll actually have to start paying for membership, and you'll have to start paying for the trading software if you want to continue on, right? We can't, just give you that stuff for free. The trading software, if you, on the delayed version, you get it for free if you do 2 trades. On the live version, you get it for free if you do 5 trades, all right? The membership after those 2 months will end. You can start paying for that if you want to continue on with all those those videos and those webcasts and those trade recommendations. If you want to continue to receive them, you don't have to though. But in terms of your relationship with your trainer, after that 8 weeks, that doesn't stop, right? You can still call up and place your trades. That's no problem. In fact, we encourage it, right? We're a full service broker. We encourage you to call up and discuss your trades with your trainer or your advisor before placing them. There's clients who are still on membership after many years, right? Because they see the value in the daily webcast. They see the value in the market updates. They see the value in the trade recommendations. But then there's other clients who've been with us for many years who I speak to almost every day and give them advice on their trading that don't have membership. And that's totally fine as well. In terms of membership, the cost of the trading platform, it's like $80, including GSD, roughly. Don't quote me on that. It's roughly $80 for the delayed data, which is about 20 minutes delayed. And it's about 110 for the live data. Again, you get it for free if you do X amount of trades. Right? That means opening and closing, right? So 1 trade isn't open. When you go to close it, that's the 2nd trade, right? And you get it for free. In terms of membership, it's $200 a month, right? And that includes a whole bunch of resources, including the trade recommendations, the market updates, the webcast, the training videos, etc. After you've done the course, most people stay on with membership for at least a few months, right? Most people do because they see the value in it. But as you get more independent, which is what we're hoping you do, as you become more sophisticated in your trading, you might find you don't need it. And if you don't need it, you don't need it. That's totally fine. I hope that answers your question in a really long-winded way. Jess, I kind of gave you the outline of the course, I felt. If you want a more detailed outline, it's probably best that you speak to Jared, right? He's our market advocate. He knows about the courses a lot more, albeit I might be a trainer. I don't run those courses. I'm not up to in terms of all the fine details of them, right? I've done the course, been a part of the course, but we update and evolve the course, right? Jared works closely with Carlo, who actually designs a lot of the education in that 2-day session. So you're best off talking to him when it comes to finding out more of the finer details. And we can always send you some information as well. I hope that's a satisfactory answer, Jess. All right.
Yeah, we can easily send something out as well. I'll tell the guys tomorrow to send something out. And perhaps I'll get Jared to try and make contact with you as well, Jess. Yeah, he's a great person to have a chat about the courses and what you're trying to achieve.
Yeah. Again, thanks very much for joining us tonight, guys. We'll let you run. I'm going to go have some dinner, a very late dinner. If you think of something that you forgot to ask in this session, you're more than welcome to call us tomorrow. If you call our main line that's advertised on Google, there's honestly a really good chance that I pick up the phone. So you might just get me. If you don't, just ask for me, or you can ask for Tim. You can ask those questions that you forgot to ask tonight. No stress. Like I said, we're a small business and we like to work very closely with our clients. Otherwise, hopefully we see you on for another webcast. And as we say here, good luck and happy trading.
Thanks for tuning in, everyone. Bye for now.